what is the future of healthcare? You will know better than me.
Yeah. Well, I think no one fully has the future of healthcare pinpointed, but in a word, continuous change, right? We'll start with a base eight. We're in an unsustainable environment, whether it's a US view, an OECD view, or whether we're looking at some of the most developing and emerging countries. We think there's a few things that are constant in an ever-changing environment. One is a further push and press to get more personalization, so individualism, or designing solutions with the use of data to be able to be individually relevant versus aggregator relevant. Two, the ability to have reward structures that actually pay based on or reward based upon outcomes, like most industries, as opposed to consumption, especially in the United States, since we're a $3.5 trillion industry. And three, if you look at healthcare relative to other industries, we lag the use of what technology has the ability to deliver, whether it's through digital modalities or otherwise, and the ability to connect individuals relative to their consumption of care or their consumption of well-being. So we think there's more individualism and design that exists relative to benefit designs, access profiles, and personalized solutions, value-based care in a true sense of the word, and aggressive utilization and comprehensive utilization what technology could drive.
So you took over in January of 2010, right? So let's back up a little bit since change is so constant. That was an $18 billion company, Cigna was, when you took over? Yes. What's changed for you since then?
Well, first, as an entity, Cigna's been around. Our founding company was founded in 1792, INA, and Connecticut General 1865. So they merged together in 1982. So there's a long-standing history of a multi-line global insurance company.
Were mergers easier back then?
Who knows back then? Although it's interesting, there are some documents in terms of certain global marketplaces where the legacy of our company, even back to the 1800s, helps us today with our global platform. Back to what we set forward to do is to drive a more focused agenda. So no longer a multi-line insurance company, but a global health service company, and a global health service company that is correlated as a growth company. We're proud of the fact that since 2010, we've generated sustained differentiated top line, bottom line, and differentiated shareholder return. That pushed us to be very market focused. So market, consumer, and innovation focused, and that's served us quite well to this point in an environment of continuous change, whether it's post-recession, changes in the global economy, whether it's pre-ACA, post-ACA, pre-mergers, post-mergers, we have the sustained result, which is a very market-driven, localized, consumer-centric business model to seek to partner with our healthcare professional partners.
So one of the inherent challenges, I would think, is that almost at the end of the day, you're a name on someone's insurance card, right? And so transitioning from an insurance sort of framework to more of a wellness one is definitely a strategic choice. But how do you wrestle with that inherent challenge?
You start with an identity question, right? What role do you seek to play? So within our company, our mission is to improve the health, well-being, and sense of security of the individuals we serve. Individuals, health, well-being, and sense of security serve. Nothing about insurance, nothing about financing, et cetera. Those are mechanisms in support of that mission. Secondly, we suggest our role is to be champions for our customers. So for example, to answer your question, we were first in our space to measure Net Promoter Score globally, NPS. We measured it transactionally and relationally for the last 7 years, and for the last 5 years, part of management's compensation ties to Net Promoter Score. And your customer is giving you feedback real time, both transactionally and relationally, to be able to drive you on a go-forward basis. So ideally, you become more than a name on an ID card. Secondly, our number one strategic imperative is to be the undisputed partner of choice, meaning we believe to deliver on that mission, we need to partner with others to be able to fulfill that comprehensive promise. In the United States, as an example, we have 500 collaborative accountable care relationships up and running. 250 are primary care based, 125 are multi-specialty, 125 rounding are integrated hospital systems. Our customers have a different experiential set when they go through those. We're coordinated in a different fashion, not owned, coordinated, aligned information flows, and then care resources like nurses, health coaches, behavioralists, et cetera, embedded in those operations, either literally if they're of scale or dedicated if they're subscale from that standpoint. That helps you evolve, but it starts with what place do you see yourself playing in the value proposition? Because if you're an insurer, you don't see yourself in that place. If you're a health service company, you need to start thinking differently.
So you said the word partnership in there. There's also a deal that happened or is in the process of happening Express Scripts, which started at the beginning of the year. Talk to us about what you saw in Express Scripts.
So 2017, we refreshed our strategy, rolled out our revised strategy at our Investor Day, re-upped on our growth plan as we successfully doubled the size of our company over 5 years, seeking to double the size of the company again organically over the next 7 to 8 years. That's our strategic objective. We laid out our M&A priorities, 5 priorities for the organization, and then we assessed what were the best, if any, differentiated M&A actions we could take of scale to dramatically accelerate our strategy. We concluded that globally, because we looked at our global chassis, we concluded that acquiring Express Scripts presented the most significant accelerant, acknowledging it's a highly disrupted environment. So we didn't wade into that loosely in a highly disrupted environment. And it is with a primary objective. It presents the most significant opportunity to further improve affordability, because we have an affordability crisis in this country. We cannot continue to pay for the rate and pace of costs in our country at its current growth rate, even though health services have lowered the medical cost trend down to maybe 6%. Cigna is delivering about 3 or 4%. That's still not sustainable. We think the marketplace needs to get toward a more pragmatic measure of growth with quality and personalization attached to it, like 2%. Express Scripts presents the ability for us to accelerate that rate of change on a go-forward basis. It also dramatically expands our addressable market. Where they compete and sell business, we don't. Where we compete and sell business, they don't. And lastly, it does so in a very financially friendly way. Less regulated business, meaning not traditional insurance business. Not that regulation is bad, just not traditional insurance business, so you have to put your free cash flow up to underwrite the business. Secondly, the service expansion, high free cash flow generation. Ending as an example, 2 years post-close, we'll be generating $6+ billion of free cash flow. We kind of like that model in a dynamic, rapidly changing environment to continue to invest
Seems
for the
lucrative.
future. It's lucrative. When you boil it all down, it's still single-digit margin business, right? But you're dealing with a scale. So you're dealing with a $125 billion chassis. And it's lucrative, like any other business, only if you deliver differentiated value to your clients and customers, because there's choices in the marketplace. Our view is that growth is generated through a basic recipe: retain, expand, add. We want differentiated retention level with our clients and customers, because if we're delivering our promise, we deserve the right to retain a ultra high percentage of our customers. Expand. If we know our clients and customers and their needs set and you're mining the data, we should be able to make value-added recommendations of what are additional alternatives to create value for you, and then targeted ads. How do we add additional business that's on strategy where we could delight the customer or client? And when you feed that, right, then we have a right of delivering a fair return for our shareholders. By the way, we're proud of the fact that we have the industry's highest margin. By the way, we're proud of the fact between the end of 2009 and end of 2017, we delivered just shy of 500% TSR. But that's all coming back to working to deliver on our promise to the customer.
So how did you end up with Express Scripts as your target? Because that's a vertical integration, right? And you also, there were some other companies, Anthem, Humana, that were predecessors of this deal that didn't go through, right? So why didn't those happen, and how did you end up with Express Scripts?
Well, let me maybe take the how we made the decision and see if this is helpful. So we view strategy in our company as a dynamic, evolving process. We don't view strategy as an annual refresh exercise. We don't view it as a few people in the company work on the strategy, we review it formally, and you kind of have a document, and then you go forward running the business. So it's a dynamic, ongoing process. 2, to be able to feed that dynamism, we build our strategy up against forward-looking scenarios. We build tangible, forward-looking scenarios, and then we build win and threat strategies against those forward-looking scenarios, and we try to identify against a key planning scenario what's the strategy to act against that, and how does it feed the alternative scenarios. And then we often attack it with what we discussed inside the company with red-blue teams, right? We'll have teams going at the strategies to refute or challenge those in different ways.
How American of you.
Yeah, we need a third team.
So the red-blue teams, talk to me more about that. How does that unfold?
So in most cases in a business, there oftentimes isn't a right answer. There are choices, and there are choices about what you're going to do, and maybe even more important, what you're not going to do. And when you're exploring a dynamic marketplace where there's imprecise data, imprecise view of the future, et cetera, we like to agitate in our company. And so what you do is you go through an exercise, and what you're trying to find is, are there points of crystallization for yourself? It's highly developmental for your talent, whether you augment them without resources or not. You're teaching people how to think differently. You're evolving a culture that's ever-present learning-based culture. You're trying to evolve a culture that's a challenge-based culture, that it's okay not to have the right answers, but it's more important to have the right questions and have the right people around you to help you find the better answers. And then you feed that dynamically going forward. So back to Express, our view of the future is you have an environment today that rapidly approaching an environment where pharmaceutical costs are almost 25% of the overall cost equation. It wasn't that long ago that it was 10%. Today, of the almost 25%, 2/3 of it is specialty pharmacy, yet half of that specialty pharmacy is buried in the medical side of the equation that you have to coordinate with the medical professional to get access to and be able to govern effectively or coordinate effectively for individuals. So you guide yourself toward that. And since information is critical to running any business, especially ours, when you look at Express's business, there are literally billions, with a B, billions of additional consumer touch points or interaction points, and a data repository that's longitudinal, so you get to see an individual more comprehensively, because life happens to all of us. Every one of us has a tailwind blowing behind us called aging and health risks. The key is, with information, can you get ahead of that and predict it? And we found the ability to predict it helps you improve health, lower health costs. That's what guided us, how we think about it, and what guided us to the asset.
So you find it, announce the deal, and then a short while later, some guys who run JP Morgan, Amazon, and Berkshire Hathaway had this great idea and made a bunch of news. How did that feel?
I think they announced that before.
Okay, before, sorry.
Yeah. I think they announced that before. In first, I guess a few comments. One, I think it's simply indicative of a rapidly changing dynamic environment. We have three, if not iconic, close to iconic CEOs with large, diverse firms who essentially say together, we need something different. One. Two, it reinforces that employers see themselves in this space, at least for the near term. Why? Employers need healthy, productive, present employees to run the business in an affordable, predictable way. And then lastly, folks are saying we can do better and challenge the status quo. Can we do better? Can we deliver a better outcome? So to us, it's more of a validation. And as a health service company, we're not an insurer with a broader portfolio. We see that as an example, if that's a successful joint venture, as another opportunity of an organization to serve and serve differently. Not through a literal insurance lens, but through a services-based lens. With industry-leading pharmacy, specialty pharmacy, behavioral health, population health, decision support, navigation support tools and resources, 500 collaborative accountable care relationships, et cetera. So it's indicative of a changing environment.
So that disruption, though, doesn't really get to happen on your terms. So how did the red blue team respond to that?
I'm not going to go directly in terms of that. Back to our business and our strategy is dynamic. So there's an evolving view of strategy with sometimes we deploy red blue teams on specific items, sometimes we deploy them on general items. We take markers. I would view that as a marker. That's a market event. That market event fits up against a couple of our scenarios, right? It fits up against some of your scenarios, and it's an indicator of certain things potentially leaning in one direction versus the other. Right. And you track markers relative to your scenarios, and then you determine, is that more indicative of your primary planning scenario, or is it putting pressure on your need to evolve your strategy going forward? And as long as you're comfortable dynamically managing it, and as long as you maintain optionality in a business and capital flexibility in a business, you have a chance in a dynamic marketplace of delivering the kind of returns I made reference to. Yeah.
So, interesting thing I noticed was also that share price since that announcement came down a little bit. Why do you think the marketplace reacted to that deal that way?
Yeah, it came down a bit, more than a little bit. You're kind.
You're welcome.
Yeah.
What's that about, though?
Well, and we're a proud corporation. We're proud of delivering on outstanding results for our shareholders and never want to see a red number attached to the company. So a couple things. One, we surprised the market. And as I was told a long time ago, surprises aren't good in business, but we surprised the market. One, for a noble reason. I'll come to the second one. The noble reason, we started our conversation in October. We announced it on March 8th. There was no leak. That's kind of novel in today's day and age, and we're proud of that. Both companies were proud of the fact that there was zero leak over that longevity. The second part of the surprise, Many parties had written a narrative that we would take a more safe path or a traditional or predictable path if we did a large transaction. We obviously chose not to. Second, we stepped into a marketplace where the narrative around PBMs, of which there's no common definition of what a PBM is negative. Because somehow we've allowed the US narrative to become as simple as the following. There's a $3.5 trillion industry that no one's happy with and it's not sustainable, and the problem is pharmaceutical costs, and within the pharmaceutical costs, the problems are PBMs. Well, we think it's more than that. And lastly, we were jumping off an environment of a really successful track record, right? A compounded 30+% TSR for a long period of time. And now we're going to drive change. So we disrupted the market. And to put a cherry on top of the sundae, it's a question through some people's eyes whether or not regulators will approve it. Because we fall into now the vertical flavor. And I'm sure, as you all know, on June 12th, the AT&T decision is scheduled to come out. So now folks are questioning whether or not this change, which we question whether or not the change was necessary, and that's a different word, actually could get across the finish line. Other than that, it's perfect.
What are you watching for in that decision?
First, we separate our transaction from that transaction because we are two companies operating in different space. We only overlap in PDP, and both companies are single-digit market share in PDP. They're not must-have distribution with must-have content so long as that narrative is being described. Clearly, now you still step back and you look at it. Is it a yes or a no, and why? Right? And if it's a yes, but with a structural remedy, how deep is the structural remedy? If it's yes with a structural remedy, I think the marketplace would look at ours pretty cleanly because there's not a lot of structure that it would have to be remedied. It would view it as, okay, the vertical could work, but where the case of basic, 30% market share otherwise has to play through, the old Philadelphia bank case, that would be an easy one. If it's a no, then the question is going to be why and what's the corollary to us.
So you mentioned the word leaks a moment ago. What do you think of the Trump administration?
I need another sentence before I wade into that because I'm disoriented right now.
But really, as you watch the AT&T decision and then look at your own, and it's a unstable marketplace, as you used earlier, what do you think, how do you feel about the Trump administration as it relates to the future of healthcare?
Yeah, so I guess stepping back, one, we have viewed as a company that we have a responsibility to be active in the social narrative relative to healthcare reform. So pre-ACA, my predecessor and I were actively engaged in Washington. I maintained that and further extended that as we go forward. We view that the healthcare narrative is a principle-based narrative, not a partisan-based narrative, and engaged on both sides of the aisle, the prior administration, current administration, both chambers, appointed officials or otherwise. The current administration, we continue to engage with. The current administration has rolled back or evolved some regulatory policy, which is positive to expanding choice from that standpoint. Beyond that, I separate the White House's posture and the DOJ's decision as two separate items. The DOJ has a responsibility for following through on the antitrust framework. I view that as a separable decision from what the White House's posture is. And lastly—
Are you sure about that?
That's the role and responsibility, and if it's not, the courts figure it out, right?
Yep.
And the DOJ has a lot of professionals that are engaged in it. They're going through a fact-based look. Ultimately, what our transaction will demonstrate is we expand choice, we improve affordability. Period. We're not dealing with captive distribution. We're not dealing with bricks and mortar distribution. We're not dealing with owned physician networks. We're dealing with a transparent environment where we're going to improve affordability. And to that end, when we announced our transaction, the economics we promised to our shareholders were the administrative efficiencies. The medical and pharmacy efficiencies we indicate go back to our customers and clients. And we're very clear on that, and our S4 is very clear on that because we want to further improve affordability from that standpoint. Final bridge to that, the administration's been very clear. The administration has said overall affordability in healthcare has to improve. We agree. We said that earlier. It has to improve. And whether it's the federal government, state government, employers, or individuals, no one's printing enough money to pay for the status quo.
Speaking of status quo, I know one thing that you've been put a big lens on as a priority is looking at opioids in the U.S. Can you talk to us about what you guys have discovered by looking at that?
Yeah, we stepped into the U.S. opioid epidemic a little over 2 years ago. through a basic filter of a deep belief set that we were essentially systematically poisoning our society and not having the conversation. And the stats were overwhelming relative to the volume of consumption of opioids in our country versus any other OECD nation, and the corollary of addiction relative to the consumption of opioids, pharmaceutical opioids, and then the conversion of over recent past 4 out of 5 people addicted to heroin were addicted to pharmaceutical opioids. So we said, time out, gotta stop. We never asked a business case question relative to it. We never asked an economic question. We leaned in and we stepped into a convener status in Washington first with the CDC, Surgeon General, and policy leaders, and in cities around the country around changing the narrative. And we backed that up with a pledge to reduce the consumption of pharmaceutical opioids for all of our customers, pharmacy, medical, pharmacy, dental, et cetera, not just those being actively managed, not just those in at-risk programs, et cetera, all of them by 25% in a 3-year time horizon by working with our practicing physician and dental partners. And I'm proud that our organization did it in 22 months. That is not an economic business case, that's a societal business case because it's the right thing to do in terms of improving health. And we're able to achieve that across that totality of that population back to those collaborative accountable care relationships and back to our deep conviction to our clinicians within our organization, because our clinicians could work on a data-specific basis with prescribing physicians or dentists or otherwise and show them how out of whack their practice patterns were, or help them realize that they weren't going to the state narcotic databases to seeing that I was getting a script from my orthopod, my dentist, my primary care physician, and my behavioral professional because I had a problem.
Right. So actually, push pause on that. How did you choose to measure progress in that space?
Yeah, so this was, appreciate the pinpointed question. Based on our clinical discipline within the organization, we measure progress not by number of scripts, not by number of pills, morphine milligram levels consumed by our customers, because that's what matters. Because you could write a script for a certain dosage or a certain number of pills or otherwise, it comes down to morphine milligrams possessed. And the data would show above 10 days at a certain morphine milligram level, high risk, above 21 days, extraordinary risk. So we're able to bring it back to that level. And our team worked with the CDC relative to the evolved guidelines the CDC has out, and that's the 25% we talked about.
Mm-hmm. Another priority that you guys have spooled up since then is about loneliness.
Yeah.
Why look at loneliness?
Yeah, this year, again, you have to step back. Global health service company, mission, improve the health, well-being, and sense of security of the people we serve. So we stepped back and we had a hypothesis, back to the strategy on scenarios. We all have hypotheses, the questions of sometimes we're right, sometimes we're wrong. We had a hypothesis that we had a loneliness epidemic in the United States, and it gives way to other health, well-being, productivity issues. But you don't run a business on a hypothesis. You start with a hypothesis and work it forward. So we partnered up with UCLA. We fielded the largest ever survey of its type, and we recently published the outcomes of it, which are startling. It suggests that 48% of Americans define themselves as lonely or somewhat lonely. And furthermore, what was more astonishing with it was that it concluded that today's younger population define themselves as the most lonely. I think it's 18 to 22 or 18 to 24-year-olds. So it was, again, how do we improve the health, well-being, and sense of security of the people we serve? How do we make a difference societally? How do we lift the bar from the health, presenteeism, and productivity for our employers? And now we're into the next round of hard work. Our clinicians are working with evolved programs and services. We'll partner with federal agencies and state-based agencies like we do with opioids.
But that's a frightening takeaway to me, that basically like America's youth are the loneliest people in the country.
That's what the data said from a survey of 20,000+ Americans.
That doesn't seem good from like a health wellness perspective.
We don't think it is healthy, which is why, again, we sat down, you kind of observe some societal norms and you say, well, let's learn from this, because let me step back a little different data point. Every generation in the United States has afforded the next generation a longer life. My generation stands to be the first generation to fail the next generation, current course and speed. This is another indicator that comes along with that. So the good news is our country has proven, as most countries have proven, you put your mind to something, you could drive tremendous results. And relative to the opioid epidemic, we're far from out of the woods as a society. A massive amount of progress has happened in a relatively short period of time. This is another example where a massive amount of progress could transpire, because the study also demonstrated specifically why people define themselves as lonely and why people don't define themselves as lonely. So there's a bit of a directional answer key there. It's not a blind study. There's a bit of a directional answer key.
So I have a question, and it's going to get some laughter, but it's a legitimate question. Somebody laugh. How much opportunity from a business perspective, and also based on the findings of these business priorities, do you guys see in marijuana? No laughter?
They're uncomfortable by it. I don't know. So when you come down to it, again, I'm not a clinical expert, obviously. When you come down to it, even today, in certain cases, in many cases, medical marijuana, right? Before we get into the bigger dialogue, medical marijuana has been used in oncological cases for quite some time. So the medical community agrees on pinpoint use, and when you step back, we just had a conversation about opioids, which come from origination of the poppy, right? So you play through. So plant-based alternatives fit a large supply, in many cases, of our pharmaceutical consumption. Beyond that, I don't know. I do know the clinical data would show that in certain pain management and in certain oncology cases, medical marijuana works. Beyond that, I don't have the credentials or point of view to be able to be constructive.
All right, that was fun. Thanks.
Do you have a vested interest in the answer?
No comment. No comment. Can you talk about some rainy day scenarios that you're preparing for?
And how do you define rainy day scenarios?
Just things that are beyond your control that you'll need to prepare for.
Well,
back to red team, blue team.
Yes. So I think, I've been CEO since the latter part of 2009. I was COO before that. I've been with the company 27 years. I think the job of a CEO, to oversimplify, is to be supremely confident and totally paranoid all the time and worry about everything. And as long as you find peace with that, you're okay. Because we're driving a global company with 47,000 colleagues every day, and you're making decisions, but then you have to challenge yourself all the time. So when I think about what disrupts a business beyond self-inflicted execution wounds, I put them in three categories. One, accelerated, transformative, legislative, or regulatory change. Accelerated and transformative, right? The ACA was transformative, but not accelerated in the duration of time for a responsible business to prepare for. I'm not saying it was right or wrong. Second piece is, same, accelerated reformatting of competitive universal supply chain. These are business at large. And third, applied data that disintermediates the core competency of your business. Not technology, applied data or applied technology that disintermediates the core of your business. So I view that a well-run business should be able to, knock on wood, monitor, have the markers, and maintain the dynamism and optionality to manage bucket one and bucket two. Bucket three, in an environment of ever accelerating technology, that's where you got to be working that really aggressively and dynamically, and you got to be willing to cannibalize business. So around that, for example, beyond red team, blue team, we stood up a captive little venture fund in our corporation a while ago and started taking investment interest in small to medium-sized startups in the technology space correlating to the healthcare space. We bought the fourth fastest growing health IT company in the US last year that specialized in personalization and essentially brought all the talent on in the organization, but they stay status where they are today, evolving new capabilities. And we took that, if you will, venture fund orientation, and we multiplied it by 5 last year in terms of size, shape, and scope. Those are examples of not answers, but they're examples of placing smarter bets and ensuring that an organization has optionality to be able to manage through that third tranche. So those are the three. Outside of that, you have self-inflicted wounds and you have geopolitical transformative events. I can't control the geopolitical. I can control the self-inflicted, ideally. I can monitor number one and number two. I got to worry about number three and use that as an opportunity for ideally competitive advantage as we drive forward.
Small self-inflicted one today. System error at Cigna. What happened?
Outside the US, in Asia, an operational change, a coding problem resulted in some data getting transferred incorrectly relative to customer data. Not a financial issue, some customer data, self-identified, self-reported, self-governed, external auditors brought in, credit protection being put in place for individuals. So not something you like. The question is how fast do you find it, how fast do you understand it? You bring third party in to validate it, you step in, you communicate to your customers and your regulators proactively, and you atone for the mistake.
Last question. 8 years on as CEO, what have you learned about yourself as a leader?
You saved that one for last?
Yeah.
I'm getting old.
Yeah.
I think what I've learned most, the more senior I've become, if that makes any sense in terms of traditional
makes sense.
roles and
Yeah.
responsibilities, in essence, you actually have less authority versus more. And your job is one of an enabler. So as a CEO, you should make very few decisions, but the ones you make are important. Your job is to set the table for success for an organization. And stepping back from a person who enjoyed operating for a long period of time, and you view that your role is different. You're part of a team. My job is to help the team be successful. Make sure we have a vision. Make sure it gets converted to a strategy. Make sure the strategy gets converted to a plan. You have an organization. You get the right talent in place. You get the rewards and incentives correct in the measures. You get the hell out of the way and you support your team in any way possible. And then coming to peace with that was a learning. That was a learning. My job is less to do. My job is to support my team any way humanly possible. And then as you see either opportunities or risks, then you lean in and step in versus pull back. That's a change. And ending comment here is success is a team sport. You just have to understand what your role is. What your role is in the team.
David Cordani, on behalf of Bloomberg, thank you very much.
Thank you.